Investors think the Bank of Canada won't make any change to interest rates tomorrow. Our guest says the central bank, sure enough, should make that decision and hold rates right through 2026. We're joined by Jeremy Kronick, Director of Financial and Monetary Policy and VP of Economic Analysis and Strategy at the Howe Institute. And Jeremy, I probably should be precise here. So this came from the Howe Institute's Monetary Policy Council, which includes distinguished members, including the top economists of the six big banks. And who else is on that council?
Yeah, that's right. So the Monetary Policy Council is made up of, as you said, the chief economists of the big six banks, as well as six of the leading academic economists in the country. And so we meet the Thursday before the Bank of Canada's announcements, and we vote on what we think the bank should do. And you know, those votes can differ for the bank's chief economists, at least, as to what their, what they forecast. But in this case, the sentiment seems to match the way the markets feel.
And the committee also thinks that really there should be no change in interest rates right through next year.
Yeah, I mean, I think there's a lot of uncertainty, at play, uncertainty in the data. We saw, recent revisions to GDP. So lots can change between now and next year. And when we vote this time for what we think the Bank of Canada should do the following week, 6 weeks ahead at their next fixed announcement date, 6 months and a year ahead. But so we vote on those conditions at any particular meeting. But again, that could change over time. The focus, I think, right now is obviously what the bank's going to do next week.
Why not just go on cutting interest rates, though? Because we do have this threat to our economy with the U.S. trade barriers.
Yeah, so I think there's a couple things at play. One, obviously, the GDP revisions that we saw the other day, that puts some doubt as to what the state of the economy's potential is, right? So, and we see core inflation has been stubbornly at 3% for a while now. So we haven't brought that back down to 2% like we have with headline inflation. So one school of thought might be that these revisions that we saw on actual GDP, if potential is what we thought it was and actual GDP is higher, that might have been what caused inflation to, sort of remain stubbornly above the 2% target and at the top end of the bank's 1% to 3% range. So with that, and you have the overnight rate at 2.25 sitting at the lower end of the neutral rate range for the Bank of Canada, in some ways it makes sense to wait and see how things evolve from here.
I guess there is the old powder dry thing. If you cut rates right down to the bare bones, you don't have that tool available anymore.
Well, that's right, and we just came out of a burst of inflation, for a year or two, and so I think we're probably a little bit hesitant to lower rates now, see that inflation come to fruition, and then have to bring it back down again. And again, like I said, with the core inflation measures the way they are, and have stubbornly stayed where they are, I think there's a lot of justification alongside this new data that we got. And we should also talk about the labor market data, which was also strong. And so I think with all of that, it makes a lot of sense to leave rates where they are.
And tell us, has the panel, the Howe panel, have they been in agreement with the Bank of Canada over the past year, or do they think the Bank of Canada has cut too much?
Yeah, so I think for the most part, the council has voted in advance for what the bank ended up doing the following week. So I think that's been fairly consistent, and that's probably the one that people track the most. The stuff where we look out further, I mean, it changes so much with the data that it's kind of hard to say. But if we look at the following week's announcement, it has followed pretty closely what the group has suggested. But I should note that we actually published the votes of all 12 members, and certainly members don't necessarily agree with others. It's not a consensus thing; it's a median vote that ends up ruling the day. But there's a lot of variance within members. Some more so than others. I think there was a lot more agreement this time around. But there have definitely been cases where members view the outlook differently.
We'd better jump. Jeremy, thank you very much indeed.
Okay, thanks for having me.
Jeremy Kronick, Director of Financial and Monetary Policy and VP of Economic Analysis and Strategy at the CD Howe Institute.